Mr. Cipollone, buongiorno, and thank you so much for taking the time to be with us today to do this interview. We're very sorry that you cannot make it in person to Frankfurt Digital Finance.
So, buongiorno to all of you, to you, Corinne, and I am sad too that I cannot participate, but we are trying to make it.
Yes,
in any case. So, thank you again for being so open to have this format so that at least we can chit-chat a little bit about these important topics of your conference.
At Frankfurt Digital Finance, we have a motto this year. That's it's time to act Europe. You just recently pointed out two sectors that basically explain Europe's productivity gap with the United States. And you said it was, on the one hand, it was finance, and on the other was technology. Digital finance and payment is certainly right at the crossroads of these sectors, of these two sectors. Which key trends and challenges would you see on the one hand for central banks and on the other hand for the private sector in Europe?
It was Mario Draghi in his recent report that pointed out to this issue that if you look at the productivity, if you decompose the growth of productivity and the differential between Europe and US, you find that the biggest difference is there in payments and technology, finance and technology. And payments is really at the crossroad of the two. So this is both a risk and opportunities for us, for Europe. It's an opportunity because if we do it, if we manage to have an innovative payment and financial sector, we could contribute to bridge the gap. Is a risk because if we don't act, the distance with the US can become larger and larger. So we need to act. Question is, what can we do as a central bank to try to improve this? Traditionally we do one fundamental thing, right? We offer means of payments to people, both at the retail level, which is cash, and for the financial sector, which is bank reserves. Digitalization is impacting all of us. So we need to respond to this new trend. And by bringing central bank money into the digital era, we can help the European system to strive and to be competitive in this new game. Let me try to explain what I have in mind. The digitalization, in some sense, is crowding out central bank money from the retail sale and from the retail sector, but also on the wholesale. But this is not just the end of the game. By doing digitalization is also crowding out or marginalizing the traditional player in the field of payment in finance. So we need to act in order to allow the European payment providers to be fit for the new world. This marginalization is already clear in the retail payment space. In fact, European payment service providers are losing market share to international card scheme. But the same problem is also true for the wholesale, wholesale transaction. The problem is not immediately evident, but is not less urgent. Let me try to explain. Stable coins are there, right? And they are dominant in the DeFi space. And soon they will enter also in regulated markets. And the latest executive order by President Trump that strengthening the position of America in the digital space will reinforce this tendency. We think that by providing central bank money on the retail level and at the wholesale level will allow the European payment service provider to stay at the center of both payments and financial sector, thereby being able to compete with these new possible comers from the US.
You mentioned the crucial dimension of technology. When we look at the digital finance, the wholesale sector, how can we eventually get to an integrated capital market in Europe, actually, meaning a digital capital markets union, for example?
I mean, this is one of the two legs I was referring at before, right? I was saying that we need to be active both in the retail and the wholesale space. Let me tell you why we are entering this wholesale space. We have been looking at this market for a while now. We have seen that over time, the interest by banks and the market operator and the digitalization of trading of the asset is increasing. Today, about 60% of the EU banks are interested in that, and almost 22% are already acting in this space. So something is happening there. We as a central bank, cannot sit and wait. We need to be in this space from the beginning. There are clearly advantages from the market to explore the DLT solution, because DLT would allow to simplify the process. Traditionally trading asset, settlement and custodian, they all stay on 3 different platforms. DLT allows you to stay on the same platform, and thereby reducing the cost. DLT are available 24-hour, 7 days, 24-hour day, 7 days a week, 360 days. So operating hours. So if you have a business opportunity at 11 o'clock on Saturday night, you can pursue it if you act on a DLT. Moreover, by reducing the cost, DLT would allow marginal player that today do not have access to capital market to enter this market, because the costs are below. But this market will not develop, or will have a hard time to develop, if they do not have a safe asset to settle their transaction. So we as a central bank, we think we need to be there from the very beginning, in this space from the very beginning, for 2 reasons. One, because really market operators think that it's crucial to have a safe asset to develop. Second, if we are not there, other solution will be onboarded as a settlement asset. I'm referring, for example, to stable coins or tokenized deposit, which would reintroduce in this space credit risk. So we need to be there. And that's what we have been doing for the last year. In May, we set up a mechanism to accompany the development of this market by providing liquidity, central bank money, for settling digitalized transaction in digital asset. We did that by a solution that we call interoperability. Basically, there is a synchronization of the transaction on DLT with the central bank money, and we experimented 3 solutions offered by the major European national central bank. I'm referring Bank of France, Bundesbank, and Bank of Italy. So we experimenting with this solution. It was an important success. We had more than 60 market participants. They experimented on a variety of use cases, both for trading asset or cross-border transaction. As a scale, in terms of scale and scope of the experimentation, this is one of the largest experimentation we had. So we believe it's a big success, and the market are telling us this. In fact, the market are asking us to continue on this path, and we are ready to provide. Before we were talking about a safe space, was a kind of safe space in which they could experiment, also do real transaction. Now we are talking to try to provide a solution for real things, so that they could use in day by day. So we are thinking to move along two routes. One solution for the short term, so that the market do not have to wait years before they can have access in a permanent way to central bank money. So we are thinking to a short-term solution which would rely still on this concept of interoperability between central bank platform and the DLT platform. This requires that also the platform itself, the DLT platform, should be interoperable. So we need to set up standard. But this is something that can be done in a relative short term. And then we have to go all in, right? To think more about the long term. What do we do with the long term? Because intrinsically, a concept of interoperability limits the potential efficiency of when you have everything on the same platform, both money and asset. That's what we are reflecting on. How to move into this more long-term solution where you have a more integrated system. And this could be really, a digital capital market union. There are two ways to do that. One way would be to have everything on one single big platform. Someone call it European share platform, where you have tokenized form of central bank money, commercial bank money, and assets, everything there. Alternatively, you could have an ecosystem of fully interoperable solutions. And the advantage of this second solution would be that you are more flexible, you can accommodate a specific use case, and it's easier to integrate with the legacy solution. We are reflecting on this trade-off. We will be fleshing out a little bit more our concept. We are discussing continuously with the market. As soon we could start to communicate on that. But this is the vision.
But a very interesting vision to not only have an integrated capital market for the traditional, but also for the digital assets. And great to hear that you're also engaging with the private sector on tokenization and the DLT projects.
Oh, definitely. This is not. We are talking a market, right? So we need to be. It's really has to really be a common endeavor of private sector and public sector. That's the way to proceed. It's such a novelty issue that we cannot work in isolation. We need a continuous interaction with the market in order to do things in the proper way.
Well, very exciting projects ahead. One last question. As you lead the work on the digital euro for the ECB, and also in regard to our next speaker, who is Burkhard Balz, who will be developing further on the CBDCs and the digital euro's role for the digital financial ecosystem, how does the ECB support the creation of an integrated retail payments ecosystem that could eventually enable more innovation on a European scale?
Thank you, Corinne. You used the key word, integrated. Because that's where we are, right? We do not have an integrated payment system in Europe for retail. Currently, there is one single means of payments that is accepted throughout Europe, which is cash. We don't have any other solution in the digital world that is so integrated. So when I come to Frankfurt from Rome, I cannot use my debit card to pay at the restaurant. Other solution allows you to pay some kind cross-border, but they do not allow you to pay online, for example. So we do not have, as a Europeans, one single means of payments that can be used everywhere for all the use cases. And this is the fragmentation problem that we have. As I said, cash is very important. It's very important for us. As you know, last Friday we issued a press release saying that we are investigating how to produce the new series of cash. Cash is very important for us. But cash has a big limitation that it doesn't provide you a solution for the e-commerce. And e-commerce is becoming a large part of our daily life. Currently, if I recall correctly, 36% of the value of all transactions are online transactions. Cash cannot cater for that. So we want to move the offer, the central bank money solution for retail into the digital era. And we think this will benefit all the stakeholders, starting from the consumers. Remember, the digital euro would offer to the people, to the citizen, one single solution to pay everywhere for all use cases. So you don't need to have, juggle with hundreds of different means of payments. One single piece of solution will allow you to cover all use cases throughout Europe. It will be safe, it will be free for certain use case, will be easy to use, it will be simple. Those are the instruments we are talking. So consumer will enjoy a new means of payments that will cover all these use cases. From the merchant side, the big benefit for them is that they will have an additional solution which will allow them to negotiate better conditions vis-à-vis other payment service providers, and merchants can have access to a customer base throughout Europe. And then you have the payment service providers, right? Today, they have a hard time. I mean, we don't have an international scheme coming from Europe. Why? Because they are stuck at the national level, at the regional level. They struggle to scale up at the European level. The digital euro, because the digital euro will enjoy the legal tender, will be accepted by all merchants, and thereby providing a platform that can be used by all PSP to scale up their business at the European level. This is the most important thing. This is really the constraint that have been highlighted both by Draghi and Rigoletta in saying that, the most difficult part for our companies is to overcome this fragmentation at the national level. Digital Euro will provide this platform to scale up. This is the first big advantage. The second big advantage, there are many others, but I want to go at the core of it, is the fact that our PSP today, they cannot really negotiate when they start to talk with the giants, right? I'm referring to international card scheme. They set the price. Essentially, they have the power to negotiate. By providing an alternative, our PSP will have a better chance to negotiate better price for that. So essentially, what we are doing, it's trying to make, going back to your point, an integrated market, which will benefit everyone, providing solution for a more competitive market, and a more competitive market means better quality and better price and innovation. So that's what we are doing.
Well, then I say thank you very much for a very interesting and actually positive outlook for the future of Europe, for the vision of Europe. And thank you so much once again for taking the time, for being with us this morning. And well, we hope to see you in person at Frankfurt Digital Finance 2026.
Count on me.
Thank you, Mr.
Buongiorno
Cipollone.
to everyone.